It's Wednesday, March 5th, 2014. Current time is 17:57 GMT. Jay Misley here from GVI Forex on global-view.com. Normally I would do an update in the morning on Thursday, but I think looking ahead, we can pretty much guess where most of the ranges are going to be overnight. And I think it's a good time just to step back and take a look at what's going to happen on Thursday. There's a key event coming up. It's obvious. It's the ECB meeting. And you can call it kind of a watershed event because this is going to dictate the euro tone probably going forward. There's all kinds of chatter going about and debate whether the ECB is going to ease or whether it's going to, at a minimum, get its revised forecast and then hold out the carrot that it might ease in the future. The former is more significant to the market as it is wavering over whether the ECB will either cut rates into negative territory, do another litro, or stop sterilizing bond purchases in an effort to add liquidity to the banking and the overall system. This is, why I say it's a watershed event, because if you look at my my monthly newsletter, which I'll put a link at the end of this video, and you can just click on it. It's clickable inside the video. You just click on the link. It'll say monthly newsletter. You'll see what I say about the ECB. It has a tendency to confound the market, defy logic. If I was in its shoes, I would cut rates. Two reasons: because you got a lack of inflation or some deflationary pressures, and to stimulate the economy through a weaker currency. Seems the Germans are at odds with probably the rest of Europe, and they seem to win out. So really, it's a coin toss tomorrow. If the ECB does something aggressive, the euro will ease. The market's dying for it to ease. It's been trying to position short all year, basically, for it to ease. But technicals in the market has not cooperated. On the other side, you have the dollar basically weak against most currencies except for the yen, and now which is back above, the dollar yen's back above 102, and euro yen's back above 140. So if you look at the euro, it's kind of third down now on the food chain, probably behind the Swiss and the yen, which have eased back as Ukraine pressures eased, and you have the euro kind of unchanged almost on the day. So that's where we are right now. If you look at charts, and this is what you should look at, you got the key levels, obviously 138.25. I'll get rid of this former trend line because it's now above 138.25. Downside's 136.40. Those are your key levels. Anything else in between is kind of noise. That makes 137 to 138 kind of like a no man's land. You can have the 20-day moving averages coming up right about near 137, and you have the 50 and the 100 period moving average straddling that 136.40 level. So if you obviously you look at the crosses whenever you look at the euro these days, and your sterling is strong, the New Zealand dollar is strong, both based on interest rate expectations. Dollar Canada is backed off from that move towards 111, 112. It's backed up, it's still above 110, and recent lows in the low 109s. But as far as the euro goes, I would say 136.40 to 138.25. If it's between 137 and 138, then 130.50 is going to set its tone. But its tone will be set by the ECB, and I explain why. We could look at 4-hour charts, we could look at 1-hour charts, but I think all you have to do is look at the ECB for direction tomorrow. And this is going to be one of those cases where how it ends the week is going to be more important than how it starts the week. You got non-farm payroll coming out on Friday, expectations for a weak number after the ADP, but everybody's looking full HVP survey on Wednesday. It just came out on Wednesday, but everybody's looking beyond the data and expecting a rebound once all this horrible winter weather effects are removed. So that's really it. You have a chance of a Monday effect. If Monday's early 136.93 high holds in the euro, as I said before, it's going to be dictated by the ECB and whether they do something or not. If they don't do something, the market's going to be disappointed, make another run at 138. If they ease, market probably test that 136.40 level, and below that, we can get into the 135.60 or so. I think is the next level after that. So in the interim, watch 137 figure to 50. It's kind of a no man's land. Above 137.50 takes on a bid. Below 137 takes on an offer. And that's it as we roll the dice. Once again, here's the monthly newsletter link. Suggest you look at it. It also has a very interesting article on dollar yen and its tendency during the month of March.